In Investing 101 today, Craig Bolanos joins us now for a look at what happens when a crisis hits the stock market. And always good to have you on the show, Craig.
Thank you.
Right now, everybody's talking about the coronavirus, and many people are worried about their retirement funds.
Oh, how can we not? I mean, 'tis the season of influenza and cold, and most people are thinking right now their portfolio has a case of the sniffles. So I think we have some fantastic talking points depending on where you're at relative to retirement.
And I think the biggest news of all is that the stock market tends to bounce back, because if you take a look at what happened with SARS, the market did eventually come back from that. So let's say you're in your 20s or 30s.
Yeah, no, you are absolutely right. So we survived SARS, Ebola, MERS, Zika, all of them. We'll get through coronavirus too. And if you're in 20s to 30s, you need to be focused on your savings rate much more so than the headlines, because in our 20 to 30s, we haven't accumulated much of a capital base, so it's our savings rate that really matters.
All right, what happens to the next age group though, when you're starting to really need to have that money and you're getting closer to retirement?
Well, when we're in our 40s to 50s, which is where I'm at now, I'm not just focused on my savings rate, I'm really paying attention to my asset allocation and exactly the investment returns I need to be generating to get retired. But that's going to leave one more category of investors, those who are on the cusp of or already retired. And for those, we all have learned so many things. And one of the things we've learned is that the market's going to do whatever the market wants to do. Expect the unexpected. So the best way to ensure we don't just get retired but stay retired is have a minimum of 2 to 3 years, preferably 3 to 5 years of dry powder, so we can ride through it all.
When you say dry powder, do you mean cash?
You know what? I want people to focus on cash equivalents, or some very short-term, high-quality fixed income, aka bonds, that they can bid out in case they need to get through the coronavirus or whatever else might come the retiree's way.
And you have even more tips for people who are in that retirement stage.
Well, Angie, thank you for mentioning. You know, if you're already retired, I want everyone to go back to 3 common sense pillars. The first being capital matters. And by capital matters, what we mean as professionals is what you have is pretty much all that you're ever going to have, and safety of principal becomes paramount. Number 2, in retirement, it's not just about assets, it's about cash flow. So pillar number 2 is generating enough investment income to cover your spending. And then don't forget pillar number 3, because this is the one that's deceptive, it gets everyone in trouble. You have to have a plan to grow your capital base in retirement, because the silent killer is not hypertension, the silent killer is inflation. And if you follow those 3 pillars, you too are going to get retired and stay retired.
Why do you say that about inflation? Because the price is going up and it's costing you more to live?
Yeah, I mean, last time I checked, you know, we talk professionally about fallen angels, Angie, and what I mean by that is there are all these wonderful men and women who have retired from great companies, and they did it in their mid-50s to early 60s, and they had reasonably priced health care, they had pensions, they had Social Security, but guess what? Those pensions didn't go up. That Social Security increase got eaten up by the cost of Medicare, and during that same time their property tax bill doubled, their electric bill doubled, the price of everything they consumed doubled, and now here they are 15 to 20 years later having the same amount of money, but it just doesn't go far enough.
Okay, good to know. Great advice. Thanks so much for being on the show.
Thank you. It's a pleasure.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.